So moving forward, I would like to ask my esteemed guest, I'll start with you, معتز, do you think that the financing system is mature enough to attract what Harith was talking about?
That's a good question, actually, and good that you bring it up in this time. So the development that has happened over the last 5 years from the Capital Market Authority in changing, the regulatory framework, the advancement that Tadawul has seen over the past 5 and 6 years has helped a lot, and we've witnessed that in the number of companies that has been going public. Also in the Numu market was a new venue for a lot of companies that are smaller in size or have a different growth profile that wanted to go public and did not want to take to the main market. So that was a good side. I think where we still lack in the ecosystem is the VC ecosystem. It's growing very fast. So in 2021 versus 2020, the amount invested in VC in Saudi Arabia grew by 270%. In terms of deal flow, there were 51% more deals in 2021 over 2020, which I think is good. But we lack the early stage, which is the seed and venture capital. And then the exit has now been defined, especially after the IPO of Jahez, which was the first unicorn in Saudi that we're all proud of. So, one of the earlier panelists, Abdez Al-Amran, mentioned that he does expect to see more and more tech IPOs coming in, and we think, the ecosystem is getting there, but there's still more and more to come.
Faisal, I'm going to keep you until we get a little more in depth with specific companies, but let me ask Diederik this question. Do you think that the ecosystem is ready to attract also companies from outside Saudi Arabia as well?
I think we are definitely in the right track. I am not sure if it's ready yet, but definitely I think we're almost there. So hopefully soon we will see that happens, inshallah, in the Saudi market.
And Diederik?
Look, I think the ecosystem here is, developing very rapidly and is becoming increasingly sophisticated. And I think if you, project, given the progress that we've made so far, if you mapped it out another 2 years from now, I think this market will be very sophisticated and very developed.
What do you think, Harith? Do you agree with them? I mean, I would like to get this into more of a conversation in order to move forward. And I'm hoping to get you to not agree on certain things, but I'm sure so far when we talk about financing and getting private versus public, so far there's a lot of agreement.
I would say, judging from what the panelists have just said, there is 2 sides to it. I think, for me personally, coming in from outside, and seeing how things have developed at the tipping point, there's been a significant amount of progress. But I do agree that, in certain areas, it's about creating depth. If you're looking to attract international companies, what you're looking for are, opportunities to be able to, I would say, first of all, tap the debt capital markets. So, in terms of the opportunities that foreign companies need to be able to take advantage of, they need to be able to see a capital markets that's deep enough. So that means, ensuring that the public sukuk issuances that are listed, there's a deep market for that, enough liquidity, that pricing is competitive. That's one thing. The second thing here is, aside from the listed sukuks, the public-private placement market itself in Saudi Riyal, that needs to be quite deep. And one of the things that I would like to see, the direction of the capital markets heading towards is to have a deep enough local currency sukuk market so that you have foreign companies actually contemplating to issue sukuk in local currency. Why is that important? I mean, imagine a company, for example, in the energy sector or in the industrial sector looking to work on mega projects. You'd expect to be able to provide that company a product or a service or a market which allows them to raise the money in local Saudi Riyal and then deploy those proceeds in the local market. And this is actually something that we see elsewhere in the world. For example, the Eurobond markets is exactly that. In the Malaysian market, it's deep enough, for example, that you see foreign companies issuing sukuk in Malaysian ringgit, right, and to use that currency to do business within the country. So having that sort of deep capital markets in the local sukuk would help as well.
So you think that is also an option for financing moving forward?
Yeah, absolutely. That's on the debt side, and of course there's plenty to do on the equity side as well. We touched on, I think one of the topics that we'll be discussing is SPACs, but also one thing that's quite interesting to see is that there is actually regulation to facilitate companies to do a cross-listing or a dual listing. And I think I'm aware that actually some companies are exploring this, and if one or two companies actually do a dual listing in Tadawul, I think that would be a game changer.
For the companies and for maybe the liquidity in Tadawul. But let's move, because معتز mentioned venture capitals also as an option, and let's go to that point and talk about the need for financing for SMEs, and also to discuss the future of Numu. When we speak about that, what are the growing challenges? When we talk about companies that are dual listing, we talk about sukuk, we talk about approaching the public market. There are challenges that the SMEs are facing. In that case, what is the future of venture capitals as a source of financing?
So I mean, we'd have to kind of, because there is some overlap between the definition of SMEs and, venture capital in terms of, maybe size, early stage, etc. But then again, SME financing is being helped by the government, in the SME authority, etc. Banks are participating now to finance more and more SMEs. Today, I think it's only about 3 or 4% of total bank lending. And there is a plan to increase that with the Financial Sector Development Program, and all the, local commercial banks are working towards that goal. But I think when we look at the other side, which is, the venture capital, it's very important because, this stems into innovation. It adds to, GDP, economic impact, employment, and again, innovation. So if you look at the US, for instance, the top 5 companies are all tech companies listed, whereas 15, 20 years ago, it wasn't the case. They were industrial companies. In other G7 countries, if you look at the top 5 or 6 companies, they're mainly all industrial.
But in the region as well, most of the main companies are defense sector, more defensive companies, either telecoms or major industrial companies. So is that something that you're thinking of, or is this the future? Will we see that change in these companies in the region?
Yeah, and I think we will, because today, because of the ecosystem that the US uses in the VC arena, they have $70 or $80 billion of uninvested funds in the VCs. Sorry, in the VC space, and so that's gives innovation. So Uber's American, Tesla's American, etc. The ecosystem is what helps that innovation happen in the US. I think we're replicating a lot of that here in Saudi. You have a very young and energetic population, very tech savvy, one of the highest penetration numbers in the world in terms of technology, and so I think we are getting there, and it's a matter of 5, 6, 7 years, and then I think we'll see a lot of unicorns coming out.
Okay, Diederik, from your experience, are there any targeted companies that could be like they move after the VC and maybe be attractive for Numu or be attracted by the Numu market? What is the target here?
Look, I think there's clearly a number of SMEs out there that over time should be looking to access the Numu market. But I think the bigger point is that I think as a market and as an ecosystem, we need to make sure we help those companies, travel that journey. And I think Numu, as a sort of listed platform with certain, regulatory requirements, I think that's really, for some of these companies, quite far out already. And I think increasingly what we're seeing other exchanges do is develop some sort of hybrid private market that sits between, maybe a listed alternative and the VC there. And I think there are opportunities out there, therefore, to give, high quality growth SMEs the opportunity to get an exchange-like experience and to feel what it's like to be almost a public market company. And I think we certainly see, across the world, whether that's Asia or the US, I think in particular, where there's I think a big surge in private markets, we see a real opportunity there that I think over time, if we can fill that gap, I think that can develop together with the, I think, developing VC industry in the kingdom, provide for a very sort of helpful pipeline whereby companies are, I think, traveling through that going public journey. And I think there is a significant opportunity there, I think, for us as an exchange to step into that role, as well as other providers in the kingdom that may be looking at that. I think we all know that there's crowdfunding out there. So I think there are initiatives. And I think as that part of the market develops more and SMEs get more information and become more sophisticated in that, I think there'll be some interesting opportunities.
So if we compare the Jahez success story to other companies that are listing on Numo, let me ask you, Faisal, why choose Numo, not Tassi, if you're a big company?
Well, I think there is a big interpretation of Numo. Everybody think that listing in Numo is much easier and does not require as many governance, as many seriousness about applications and what have you. It depends really on the shareholders' intention of listing. So Numo is an excellent opportunity for company that just practicing governance, and they want to make sure that they apply governance to the maximum in line with the international standards, in line with CMA and Tadawul standards and what have you. Having said that, Numo is a very attractive market. I think you're going to see more and more companies going to Numo.
But the liquidity there is not, it doesn't move a lot. So why would investors be interested?
Well, if some owners really doesn't want to sell as much as they want to make sure the company continue its growth.
Okay.
And see, the issue that we really have to focus on, in family business specifically, usually the first generation incept and establish, and they sacrifice a lot to establish. Second generation, usually the best, because I belong to second generation, but second generation grow.
Okay.
And they focus on profitability.
And the third generation, they say, spends the money.
Well, since I have
loses
so many,
the money.
Third generation, they like to rewrite the story with a modern touch.
Okay.
Now, if they keep their focus, and if they are dedicated, then they might, most probably they'll succeed. The problem happens when they do not know the value of what they have.
Okay.
When they do not know the amount of sacrifice, effort spent to reach here. Going IPO in this case, whether it's Numo or Tassi, gonna apply sweet pressure on any executive management to perform, and it helps to segregate between ownership and leadership. So it's good to have both in one, but if not, then it's either you perform to the expectation of your investors because they want to have dividends, they want a growth, or both. Or you step aside and let others perform to the expectations.
Okay, so
I
that
think,
brings us to, yeah, please,
Yeah,
I was going to ask you something.
Because you just addressed the liquidity matter that people say about Numo. So when Numo first started in February 2017, 7 companies listed. They were covered, on average 3 times. It was something new to the market. Liquidity, yes, was weak in the beginning. And then the next phases started coming in as the market developed. And so in 2019, the Aramco IPO, more liquidity on the main market, and at the same time, Tadawul approved the journey of Numo companies and the ability of them to be elevated to the main market. That helped bring in more liquidity. As more companies came in, we did also notice more liquidity. I think one of the game changers was the Jahez IPO. And so, we were in Francie Capital, we were book runners on the IPO, so we've seen this, firsthand. The number of registered people on Numo almost doubled.
Okay.
Because people wanted a piece of that cake. And since then, the liquidity has been high, the awareness of the Numo market has been very high, and the number of questions that we get, from companies on a daily basis.
Interested in Numo.
Interested in Numo.
So please feel free to jump in at any time to all of you. But I have another question for you. If you're going to look at Numo, what are the advantages versus the drawbacks of listing on Numo? And financing for that purpose?
Yeah, I mean, first of all, it depends on, what is the shareholder's objective, right? Do you want a liquidity event? Is it just for governance purposes? That's something you want to address. Is there a primary capital element to it, or is it just secondary that you are selling out? So these are, shareholder objectives when they want to go public. If you take Numo, for instance, it's less work. Generally speaking, it's less costly because the amount of work on the advisors is much less. It should be quicker in terms of approval process because it's, a smaller file. So that's, the good thing about it. The drawback, of course, is, if you want to sell 30% of your company, you may not always have the choice. One of the other, pros for it, if you're a hyper-growth company and you don't want to sell 30% today, you can go ahead and sell, through a direct listing, 5-10% within the first 12 months, and then you'll have that kind of hyper-growth momentum, make the best out of the company, and then in 2 years you move, if you're sizable, to the main market. And so it'll be a total journey for a company by, in terms of readiness.
So I know Harith had some criticism on this.
I wouldn't say criticism. I would say that, look, we've seen opportunities to advise on IPOs, and some companies have all the right qualities to actually go to the main market. So I completely actually agree with what معتز has said around the pros and cons of Nomu. But I'm a strong advocate that if a company has all the right qualities of going to the main market, then an IPO is not an easy task. It's a strategic milestone for many companies, and yes, Nomu is easier, but the journey of going IPOing in the main market in itself is a great learning curve for the board, the management team, and it prepares the company for life, as a public company. And it's not easy. I mean, one of the things that you don't want to see is a company that goes public as an advisor and then struggles, to meet all the obligations of being a public company. And in the worst case, what could happen for the company is that it delists. What I would say is that, look, when you aim for the main market, the most important thing I would advise boards and management teams to consider is ignore the costs. There is obviously more costs to go into the main market. It is a time consuming process, but the prestige of being in the main market is a very important consideration, I would say. Secondly, the liquidity of your shares can actually serve as a currency, for future capital raising. So if you want to do a secondary offering, you may find actually, because of the amount of liquidity, the discount on any sort of offering you do to the current market price might be lower. For sure, I would say, compared to Nomu. And finally, let's say a company wants to expand overseas. And this is becoming more and more of an important consideration because we're seeing a trend of Saudi companies, born and bred in Saudi, reaching a scale that they can actually compete as a national champion on the global stage. Now, if you want to do that effectively, you have to be a public company, and you have to be publicly listed, in a main market that has all the right attributes where international investors see that they would like to participate in. So for that reason, I'm a strong advocate of advising companies that have reached a certain scale and maturity to just go for main market listing.
Going for the main market, do we start the conversation about SPACs and direct listings and SPACs? Are they a shortcut to traditional IPOs, Dietrich? Do you think that, especially after we heard of Anghami approaching SPACs in order to list in NASDAQ, they approached an international market, but they were backed by Abu Dhabi, the Abu Dhabi international market, I think. Is that an option? And why could it be an option for financing?
Well, look, I think we've seen in the Saudi market a tremendous pipeline of IPOs developing over the past year, and I think a great success in terms of where the market has come to. I think as we look forward, I think the IPO product really is being quite actively used now, and I think we're very pleased with that. I think as a market for us, what's important is providing alternatives for companies to come to the market, right? And both the main market and the MOE are examples for that. I think on the MOE we also have now the direct listings product, where companies can come to the market without raising capital, but opt to raise capital at a later stage. We're confident that that product is also ripe to be introduced to the main market. And then I think clearly, as you say, there has been a lot of focus in the past 12 months on the topic of SPACs. I think it made up about 50% of the total issuance volume in the US. And it is a product that is seen to be attractive because for companies, not so much as a shortcut to an IPO, because at the end of the day, you know, if a company is a public company, with that comes, I would say, a reporting framework that they need to comply with. But what companies like about it is the combination of being able to merge with an entity that has cash, and that if you're an entity that has growth, the combination of that means growth and cash together, so you fund that, as well as having some upfront clarity on the valuation that you might be getting, rather than going through the traditional IPO process. Look, I think the SPAC product, there's a lot of excitement around it. It's also a very complex product because it's about financing together with, at the end of it, a sort of what they call a de-SPAC or an M&A transaction. And I think that's not necessarily, it's not necessarily clear, therefore, if you're an investor and you buy into the SPAC IPO, what you're getting at the end. And clearly with an IPO, you know exactly what you're buying into. But look, I think there's a lot of excitement around the SPAC product. It's been launched in certain other jurisdictions. And we're certainly looking to explore the feasibility of that. It's a product that I think with the right sponsor and I think with the right design, I think there is definitely interest in that product from both out of the SME space as well as from larger corporates. And I think for us, if this is another opportunity to provide another way of entry into the main market, that gives us the same kind of product as we see in other sophisticated markets. And look, following our own IPO, I think we count ourselves as one of the leading global markets. I think that's part of our product suite that we should be able to offer, clearly within the right regulatory framework. But I think there is a fantastic opportunity there.
I mean, like you said, opportunity, but still the framework is not ready. I'd like to get the investment banking point of view on this. What do you think of SPACs as an opportunity, as a financing tool? Both of you. Whoever wants to go first.
I mean, it's been a very controversial global matter, right, SPAC. So, it eases being listed because you get spun off, in a company, technology companies like it, that let's say, for instance, in the US, who, were leaders in SPACing and de-SPACing, there are a lot of, the good and the bad, right? So I guess there's no clear-cut answer as to is this the best way or not. But the more product offerings you have, the more sources of funding that you have in the market, the deeper the market is, the better. Will everything work out? Will everything make money? Of course not, right? But at the end of the day, things will regulate itself. And I think markets will regulate itself as investors get broader and broader and understand more and more different product types.
Harith?
Yeah, I agree with that. I think we should take a very cautious approach towards SPACs. I think in terms of timing, we're actually quite fortunate, Saudi Arabian capital markets, to see how SPACs have evolved. And what we've seen, the good, the bad, and the ugly, some great successes, but what it enables us to do is actually frame the regulation in the right manner to ensure that if and when a SPAC does come to the market, then it's beneficial for all stakeholders, especially for retail investors. What I would add is that a SPAC is all well and good as a tool for diversifying sources of financing. I think it's also important, as a market, that we also introduce products alongside, SPACs, which is quite sort of exotic, unique. Things that we already see is working in the global markets, such as listed private equity funds. So if such a product comes to market, a listed private equity fund, which operates in a similar way to a SPAC, from one perspective, then it slowly get the market, investors, issuers, and the portfolio companies, more used to the idea of investing in such a vehicle. So I think it's also important to consider it from that angle and have products like listed private equity funds alongside SPACs, just to prepare the market for such products.
Let's get the opinion of a family business. Would that have been an option at any point, looking at either Tasi, Numo, would that have been an option to help fund, or just another option for you?
It depends really on the company requirements and needs, company cash status, growth plan. If a company, in my humble opinion, wants to double the size of its operation, it might be a very good option. If a company is looking for a normal growth between 15 to 30%, I don't think it's the right option for it.
So this brings me to ask, this takes us to family businesses and IPOs, and it's something we've been touching on since we started. But you discussed that when you go from generation to generation, the growth of the company and the growth of the culture within the company. So how important is it to list to survive?
It is extremely important for two good reasons. I see Mr. El-Gawaz is here, and I better say so. So that's number one. Number two, see, if you don't have governance, then you do not have boundary. It's an open authority. In family business, the decision making could be in very few hands. Now, if the decision maker is experienced, it's a different issue, but if he is unexperienced, it could cause a great harm to the company. When you have governance and when you list, you have you have to go through so many committees, you have to answer to the board, you have to answer to your shareholders, you have to answer to the media, to the investors, so really it put a very good and firm construction for your decisions. Spending becomes investment. So whatever you spend, you have to really have a good justification for it as far as return. And even if a family business does not want to go IPO, to list, in my opinion, they must have governance, because it's very dangerous to have a family business while growing, but they are not following governance that makes sure the decisions are taken at the right basis, discussed properly, enlightened properly, and what have you.
So how and when are family businesses ready to list Dietrich?
Look, I think family businesses is like any other business. They face the same challenges, right? I think ultimately it's about getting ready for that discipline that is needed to grow the company longer term. And I think having a well-articulated regulatory framework that you can impose on that on the outside, I think is absolutely critical. I think most companies that we talk to, they find the process of going public a process that is really a new experience for them. I think a lot of companies think that they know their own business, but I think when they're being challenged from the outside by bankers, the regulators, in terms of what drives the growth, how are they being managed, and what's the governance, I think what we typically find is that they learn a lot from that process themselves, and they come out almost better at the end of it. So I think, despite the fact that family businesses, where there clearly is a lot of expertise in terms of how the business has grown over time, I think to make that business ready for the future, particularly if that business matures, it wants to make larger investments, it wants to potentially make acquisitions. I think having that discipline, I think that Faisal referred to, I think is absolutely important, because when things go wrong with businesses, they tend to go wrong quickly, and there's obviously a reason for that. And I think often what that boils down to is governance, and it's not having the internal and both the operational but also the financial discipline.
And how do you get to the governance?
Sorry?
How do you get there?
Look, I think I think it's a journey, but I think luckily, increasingly what you find nowadays is that, with the corporate governance framework that's there, with the increased focus on ESG, I think there is a lot of pointers out there for management of companies to say, look, do we have the right board? Do we have the right expertise at the board, right? That's where it all starts. And I think what the regulator does and what the investors do is they provide fundamentally that board with a framework in terms of how they're thinking and what they're seeing, with other companies and how those companies are successful. And I think the board then needs to take that and say, okay, if we take that and we want to translate that throughout the organization, what are the changes that we need to put in place to be successful, whether that is people, whether that is processes, procedures, operations, or otherwise. And I think that's how it percolates down the organization. I think ultimately discipline and leadership kind of flows from the top. And I think hopefully the tools that the regulatory framework puts in place around public companies provides them with that framework to say, look, this is the right way in which we should manage and run our business going forward.
So, yeah.
Practically speaking, I would say two things. Number one is vision, and number two is support, right? And the reason why I say vision is, I'll just briefly talk about a conversation that I had with the CEO of a non-bank financing institution. These guys, they're in the day-to-day hustle and bustle of financing, SMEs. So they get to see exactly, what the challenges are. So he gave me two examples. A young entrepreneur who, runs a chicken farm. The other, a veteran businessman who runs a cattle farm. Just bear with me. The entrepreneur is a young man who was running a great cash-generating business. He borrowed money, but used the proceeds not to invest in his core business of chicken farming, but in a completely unrelated business line. Now, not surprisingly, the business went from being cash positive to cash negative. On the other hand, the veteran businessman, had built up his business for 20 years. Today, that business is now generating revenues of 30 million Saudi riyal per annum, but the next generation, they do not want to continue with the business. So what's going to happen to this business? It's eventually going to stop trading. So I guess the point here is that, if had the young entrepreneur and the veteran businessman known about, or had the vision of eventually in the long term listing their company, then they would have planned their business strategy and executed their operations differently. And this comes back to what my panel members said around instilling discipline and having a direction going in that journey. And so I think part of going through that journey is to have a bit of a helping hand, and sometimes it makes sense for entrepreneurs to partner with an institutional player like a private equity fund manager.
To grow.
Because it gives them an institutional growth mindset,
Okay.
right? And that institutional growth mindset helps them to not just get capital, but also the expertise to go on that journey and to eventually list. So that will solve the problem of, a young entrepreneur who's not experienced, taking the direction of his business away from what's core. And for the veteran businessman, simply put, being able to handle succession planning.
So we ran out of time, but I have one final question for all four of you. It's a little tough, I think. In one sentence or in one word, what is the biggest financing opportunity you see today in the market?
SMEs.
I think, equity markets in general. Equity. Yeah.
Listing in Numu.
Listing in Numu.
Look, I think there are many fantastic financing opportunities out there as the Saudi economy grows and develops, including coming from abroad. And we're looking forward to help those companies grow through a markets platform that we provide.
So I know for a fact now that if I want to list at any point, I would like to have any of you gentlemen on my team. Thank you very much for being on this panel.
Thank you.
We had a good talk. Thank you everyone for being with us today.